Good day, investors. I'm Mike Smith, CFO of PSG Konsult, and pleased to have the opportunity to share with you our latest financial results for the 6-month period ended 31 August 2021. I'm going to run through our overall financial results, then go through our divisional performance, thirdly, run through some focus areas, return and trading stats, and finally conclude. PSG Konsult has an unchanged group structure. With PSG Group remaining our anchor shareholder, we have then 3,450 other shareholders. At present, 18% of our issued shares are owned by institutional shareholders, our largest institutional shareholders being Coronation, which owns 8.2% of PSG Konsult, and Allan Gray, which owns 3.8% of our issued shares. We've got relatively small market shares in each of our businesses, Wealth, Asset Management, Insure, and for that reason, we shall continue to prioritize organic growth. PSG Konsult remains an advice-led business with a broad footprint throughout South Africa and Namibia. We have 948 advisors operating out of 263 offices, split as follows: 61% wealth advisors and the remaining 39% are insurance-focused advisors. Business characteristics: we are equity market dependent. Key driver of our profitability remains the value of our client assets under management, which is our key focus area. We are administrative, business people, and system dependent, and for that reason, we've maintained a strong focus on further enhancing our digital platforms and capabilities aimed at enhancing our overall client experience. Our people is what differentiates us as an organization, and we remain focused on growing our own talent and continue to make significant investment in newly qualified graduates, in particular with STEM qualifications. PSG Konsult remains well capitalized with a capital cover ratio of 233% based on our latest insurance group return and comfortably exceeds 100% minimum. Our financial performance and prudent approach to investing shareholders' assets continues to ensure that the group is in a strong financial position with excellent liquidity. In July, the group's long-term credit rating was upgraded by global credit rating company to A+, while our short-term credit rating was affirmed at A1 with a stable outlook. We have 21 regulatory licenses, 17 in South Africa and 4 foreign licenses, and therefore are very much focused on ensuring that we remain in the forefront of dealing with any regulatory changes and updates for our business. I'm then going to take you through our results. Key macro indicators. We experienced an improvement in key macroeconomic indicators during the current financial period, with the Rand US dollar strengthening by 15%. The JSE Aussie was up 22%. The property index was up 42%, both outperforming the S&P 500, which was up only 10% in Rand terms. The volatility of the macroeconomic indicators, is illustrated in the table, reinforces the positive outcome benefits that clients have experienced whose portfolios have been well diversified across different asset classes. If we look at a recurring headline earnings per share, that was up 23% during the current period and up 30% pre-COVID levels, clear evidence of our ability to succeed despite the prevailing conditions. 21% growth in assets under management through a combination of positive net flows and investment performance market gains remains a key driver of our overall results. The small decrease in weighted average number of shares is due to the shares we repurchased as we've continued to focus on optimizing our risk-adjusted returns per share. In light of our strong financial position and confidence in future prospects, the board declared an interim dividend of 10 cents per share, a 25% increase over the previous period. Our dividend payout ratio remains between 40 and 50% of full year earnings. Our base of payout ratio, however, remains unchanged. We've now adjusted it to recurring headline earnings, excluding intangible asset amortization, a metric that we feel is better aligned to the group's cash generative earnings. The successful track record of the 3 divisions is highlighted via our 5-year recurring headline earnings compound annual growth rate, with Insure having delivered a 23% compound annual growth rate over 5 years, Asset Management 14%, and Wealth 12%. Our divisional profit contribution, Wealth delivered 58% of profits during this period, Asset Management 24%, and Insure 18%. We continue to manage and evaluate our performance against an unchanged set of metrics. Our 10-year track record highlights the sequential improvement in all key metrics, with a 22% growth in assets under management and a 21% in the current period are key factors that we're proud of. Our strong top-line revenue growth of 18% over a 10-year period and a 13% in the current period is another highlight. Operating margin continues to improve as we unlock economies of scale benefits. The sequential growth in earnings and dividends per share for the past decade is testimony to a great firm aimed at delivering strong shareholder returns. We now move on to our divisional performance. First of all, Wealth. Wealth recorded net inflows of 10.8 billion in managed assets, which is up 40% over the last 6 months, resulting in Wealth managed client assets increasing by 11% to 257 billion. The Wealth division recently received the following 2 Intellidex Industry Awards. For the 3rd consecutive year, we won the Wealth Manager of the Year Large Institution Award, and we also won the Top Online Broker Award, and were ranked 3rd in the Top Overall Broker category and took 2nd place in the Top Advice Broker Award. Our strong performance across the board bears testimony to our dedication to our clients and the hard work of our securities team. If one looks at the next slide, it highlights the flows that we've brought in on a 6-monthly period in the business, a record that we're very proud of. Our sustained investment in digital capabilities, which is aimed at enhancing our client experience, has enabled our advisors to maintain excellent client relationships and service levels as they provide our client with expert guidance based on holistic long-term views. We're pleased with the top caliber of wealth advisors that continue to join the firm. Our wealth advisor force increased by 16 during the current period. 28 new wealth advisors joined us, with 12 retiring, who largely transferred their client book to remaining advisors in their office. Asset management achieved a 13% growth in overall assets, which now exceed 161 billion, and this has enabled us to unlock further operational leverage scale benefits for our Manco business. A key contributor to this success is the strong growth in multi-managed as well as single-managed assets that we've seen during this period. The improvement in net flows is a function of our improved investment performance, which I'll cover in the following slide. The asset management team, who have a differentiated, high conviction and active management style, delivered pleasing results, with most funds achieving top quartile performance over a 1-year period, enabling them to once again earn performance fees. During the current period, our clients benefit from their long SA Inc. stock views. PSG Asset Management, however, remains focused on long-term investment outcomes, but pleasing to see that most funds are now performing in the top quartile over a 1-year period. The Insure division. Insure achieved commendable results during the current period, receiving the Santam National Intermediary of the Year Award for performance excellence in both the commercial and personal line categories. The division continues to focus on profitable growth with an emphasis on commercial lines type of business, which require advisor expertise. The insurer advisors remained stable during the period. In fact, we had 50 new insurer advisors join the firm during the period, and a similar number retired who transferred their client books to remaining advisors. Western National Insurance. We had no significant catastrophes, and the quality of our underwriting practices once again delivered pleasing underwriting results. Our insurance float benefited from recovering markets. Western only had a 6.4% equity exposure, so we remained conservatively invested. Our focus areas. We continue to focus on top-line growth and achieved a 13% increase in core income, with all divisions increasing their top line during the reported period. The key factors that we consider for all our decision-making remain unchanged. We focus on recurring revenues, margin enhancing, and risk versus return. We've delivered a consistent return on equity above 20% for all of those periods, and in the current period delivered a return on equity of just over 22%. Other highlights include the continuous improvement in both our operating margin and cost-to-income ratio. If we then move on to some of our return and trading stats. This table illustrates the total return that a shareholder would have had who invested 100,000 in PSG Konsult when we first traded over the counter and reinvested all their dividends over the past 15 years. That investment would have grown to over 5.5 million rand. An investor who had invested the same amount of money in the JSE, investment would have grown to just over 800,000, showing the strong improvement in results that we've delivered for shareholders over that period. If we look at some of our historical P ratios and REE trends, what we're particularly pleased of is be able to deliver return on equity during the current period after adjusting for inflation of over 17%. And you can see the return on equities that we've delivered over the past decade have all been very good, well above inflation. If we look at some of our trading stats during the current period, on an annualized basis, 6.7% of our shares traded hands. Finally, I'd like to conclude there. We have a formidable advisor network in South Africa with a broad geographic footprint that we continue to expand. We have strong governance structures in place, clear growth opportunities for our business, a history of delivering superior shareholder returns, and we shall continue to focus on optimizing risk-adjusted returns per share, and that's why we are restrictive in the issuance of any new shares. Investors, I encourage you to follow us on social media platforms for news updates and events, especially our Think Pink series. Thank you for listening to me today.